But we start with our talk of the tape. Inflation in retreat, leaving the bulls in charge. So is the summer rally overheating already or just getting warmed up? Let's ask AJ Oden, JPMorgan Global Investment Strategist. He joins me here at Post 9. AJ, thanks for coming in.
Thanks for having me, Mike.
Good to see you. So a lot of things falling into place, right? We have this disinflation story. We got reinforcement on that front. Economic numbers have been coming in better than expected. The market seems comfortable with maybe one more move from the Fed. Do you view all this as some kind of a green light to take more risk, or how would you be approaching it? Does the market have this reaction right?
Yeah, no, that's a great question. I think part of it is, maybe it's a little too soon to declare victory just yet. Inflation did come in better than expected. It's the lowest since March of 2021. I think since we've seen more narrow leadership in the S&P performance, we expect it to broaden out a little bit more. And what we've been telling our clients, we like equal-weighted S&P right now. Whether inflation continues to come down, I think it's in the right path. Disinflation coming in, that super core services as well as core coming in a lot better. But we still expect a little volatility somewhat later in the year because the recession still lingers out there, as the Fed will have to do a little bit more in order to bring inflation down to 2%.
Yeah, let's get to that idea that a recession perhaps is hovering out there somewhere, because it seems as if the market is trying to move on from last year's villains, which would be inflation and what the Fed had to do to fight inflation. And now it's been concerned about growth, about U.S. growth, global growth, but maybe a little more optimistic on that front recently. Do you think it's wrong to be optimistic that we have this sort of firmness in the economy right now?
No, I think it's good to be optimistic, but I think we still need to take into consideration that there will be a bit of a slowdown. Earnings coming out this week. We expect a contraction as well. I don't think we'll see the contraction that maybe the market has priced in at. They're looking at about negative 7.5%. I think we believe it's closer to maybe down negative 3%, just because margins haven't been as compressed. Consumer has been resilient, but we still have to remember that the Fed is going to be holding higher for longer, and I don't know if that's been priced in as much. So I expect a little bit of volatility, but the softest landing is still very much in play, and it's possible that any recession that we see may not be as long as maybe the market has originally anticipated.
Yeah, it would be maybe an odd type of recession based on what we can view right here. Right, people are talking about earnings estimates are going to be beat again, most likely. The forecasts have held up okay, and you're saying equal weight S&P maybe is worth new money right now as a catch-up trade or a broadening out of the market. We've seen some of that in the last month. In fact, just saw some numbers that inflows into equal weight ETFs have been pretty strong. So are you encouraged by the way the tape has acted in the last several weeks, or do you think that we still have, an unbalanced market?
I'm definitely encouraged by it, but I think there's also some other opportunities out there because as we look, to some of the early cycle opportunities for Midcap equities.
Yeah.
I know they don't get a lot of love, from investors, but if you look at over the last 3 recessions, they typically outperform by about, on average, 21%. And so if you're looking for early cycle and the potential for earnings to be better in the 2024, it's good to find that entry point today with Midcap equities. Mm-hmm. And so we like that as a great attractive point for investors. But the broadening does make sense. I mean, that narrow leadership we saw, I think a lot of it had to do with the AI boom.
Sure.
And so seeing some broadening is a good sign, I think, and we think, for markets and for investors that, it's a possibility for the market to continue to press higher, as they move on throughout the rest of this year.